All righty, Doc here from North America. Good morning, good afternoon, and good evening. What do we got here? It's TGIM. It's Monday, so let's see what we got going on today. As you can see, that's Bitcoin. You can see Bitcoin moving up again. Was talking to Wilco, for you out there that do remember Wilco, who was one of the presenters here at Dukascopy, about the bottom in it developing last week. So that worked out all right. Let's get the Swiss up there instead. Okay, that's right there. There's the Swiss. Let me just change the pages. There it is right there. And then there is the Swiss right there. You see them both at the same time. See it trying to bounce up. Again, the dollar just trapped in its range, and the Swiss trapped in its range, and pretty much all the other currencies trapped in their range. Let's see, what was the news over the weekend? No real deep market news, I guess you could say. I'm trying to think. I don't think we saw anything that really jumped out at us and said, wow, you need to pay attention to this. We're watching, inflation march forward. We're seeing, we did see England last week raise its rates again. So we do have the adult in the room, and that is the exchequer. And now we're just waiting to see, I guess, the longer they delay Mr. Powell, I guess the longer we have to wait for rates to move up in the United States. You would think the markets would start to interpret that, but it just shows you how much of a grip they have. And at the same time, notice as they're raising rates in Great Britain, let's just show you real quick. Look at the British pound. We'll just throw it up on here for a moment. But obviously, the same thing is happening with the Swiss. Rates are not going up here in the States, but the dollar is gaining value again, as usual. In other words, it gains value, it loses value. But you can see the same thing here. We're sliding into a daily sell. We didn't get into that weekly buy. You can see right there. It's just and it's trapped between the 50 percentile and the 100 percentile. And that's been going on for about 3 months now, if not longer. Let's see. Yeah, since basically November, where it played around with the 50 percentile, comes back down to the 100 percentile, and bounces around. You can see here all the way back to September. You can see the same thing in August, banging around between the 50 percentile when it came to 0.26 down to 0.26 in the opposite direction. So it's really fascinating just to enjoy watching. As we always say, before there was a Fibonacci sequence, there was obviously Doc's mathematics. In other words, not my mathematics, just what I discovered. We're not inventors really. We're always discoverers. Anybody who thinks that they're inventing quantum mechanics, they don't invent quantum mechanics. You discover it. You don't invent relativity or gravity. It's already there. We just kind of discover it as individuals. For myself, dealing with the surface of space and objects moving on it, we discovered some of the characteristics, and that's what our math is all about. But it's fun to watch the Fibonacci sequence be respected the way it is, and you can see our math, how it chimes in with it. How it gets into the minus area, lifts up as it's supporting itself and climbs. So, ooh, I forgot. We got to go tune in. Let's go check out and see if anybody is saying hello this morning for a Monday morning. Let's see. Let's hear if my. Ooh, there's a car commercial. Let's get rid of that. Nope, don't see anybody saying good morning or good afternoon or good evening or anything like that. So, all right, we're just going to keep on rolling along here. Got a few streamers in there. So, in the end result is that the interest rate factor and the inflation factor seem to be in a stable, I guess you could say, environment. In other words, it's not really getting panicky. They're not, pushing it up hard. They're not knocking it down hard. It just seems to be just right there. So we will continuously, obviously, as we always do in the webinar here, we'll watch and see how it plays out. That's what it really comes down to, is watching how it plays out. Now, notice here we have Bollinger Bands. Maybe we should, oh, okay, there we go. We turned them off. So you can see there's the Bollinger Bands. And you can see how they try to emulate, I guess they I guess they should belong up on the up where the chart is, really, something like that. There's the Bollinger Bands, and then you can see our time manifolds. That's what our time manifolds are all about. You can see the difference in them, and I guess we should probably make them like the same color. That's probably why we had that on there. I don't remember who was asking us about it, but I probably changed colors just so we could, you know, make it a little bit more coherent. And then let's make that down the middle. No, that's not the one we wanted. We want that to stay like that. And we want the yellow one to turn. Well, the yellow one can stay yellow. How's that? That's fine. Okay, there we are. So you can see the Bollinger Bands too. In other words, one standard deviation versus two, or you see our time manifold where it bottoms here and starts to lift again. You see it bottomed here on the Bollinger Band and started to lift. You can see our bands tightened earlier than their bands tightened, that type of thing. It just shows you how using a standard deviation with our mathematics is a little bit more enlightening. So that's just the way it rolls there. All right, back to the Swiss, I guess, on some level. You see it there on J4X. It's coming to its bottom. And for our Chicago quant side of it, it's already in a daily buy, just like it is flirting with it on J4X. So both are joining in together. You see here we're on a second day now, since Friday, of the daily buy there. Let's grab one of these greens and just move it over like that. You see it close there on Friday. It's the Friday close. The weekly, firm, you know, just playing firm. Nothing more to be said about that except for the fact that it's firm. It's playing at the top end of the range. You can see that right there. We are at the high end of the range, and that range is an interesting one. It looks a little bit shorter. I thought we had one in here that showed the center point. Let me just do that again with the like that. Yeah, so there's a center point, you know, with the Fibonacci. You can see how it played in there and tries to play in there and so forth and so on. And I guess if we move it over, you know, it's playing with the range. And every time we think it's going to come back down to the low end of the range, it has not. It's been a while since it really visited the low end of the range here, and you can see it there. And the range is about 3.5 handles for. That's not too bad. That's pretty good. 89 to 93, I guess you could say, something like that. What's the high there? The high is, yeah, it's 92.60 basically, and the low is 90, is that right? 91? 91, almost 92. So that's not much of a range. It's been trapped in there for a long while. You can see even when it tries to, you know, play down, this is back last spring, you know, it plays down there from coming off the top over here. Let's move that over a little bit more. Oop, like that. You see it oscillated wild for a little bit there, went above the range and below the range, identical, like that. So, and then it married that bottom end of the range back in 2020. It was underneath it for a little while. And I guess we don't have any data, but I think it was above it again, up around 93. So every time it goes to one extreme of the top end of the range, it does the same thing down at the bottom, but in the end result, it's pretty much playing down the middle. That's the middle there. Let's see. Somehow or another, that seems odd. I wonder if we've lost one of the originals. But that's all right. We'll work on that when the webinar's not on. What else can we say about the Swiss? I guess that's about it. So interest rates are rising in England, and they're going, allegedly, supposedly, promised, going to raise them here in the States. So we'll see. All right. From there, we looked at, let's take a look at Euro. You see Euro is doing its thing. It's banging again against the 50 percentile right there. We're starting a curve here on that math. And let's take a look at it over on J4X. It's been impressive. You know, the euro has really lifted up. I guess they're expecting them to raise. Now, I guess Christine Lagarde came out and did say something kind of positive about it. So I imagine they, you know, it's like Duragi. All you have to do is say it over in your ECB, you just say that you're thinking about being tough, and they automatically credit you as already happened. Oh, all done. It's kind of like the old British Empire, you know. Ah, let's have a spot of tea. Time to take a break. As we take a sip of our tea. Yum. But yeah, I'm a little confused. She is threatened now to be tough. Not that she's actually named a date when she's going to be tough and raise rates, but they're threatening to be tough. And you know, I would think they seem to move more in lockstep with the United States. So the moment Mr. Powell does get his team to raise rates, I'd imagine the European Union will do the same. Who knows? Maybe they'll do a steenth or something like that, or an eighth. You know, they'll do an enormous fraction. You know, I think right now the rate is something around anywhere from between 3/8 and a quarter or 5/16, something like that. Remember, bonds have a habit of trading in fractions, so not decimals. And so, as much as we see them, let me just show it to you. Bonds kind of trade in decimals. It's something to do with the way they like to make money. Like I said, I think I think last week's webinar was bonds are the Wild West, and we had a conversation about how they do those things. Let me just show you. Here's the 30-year right here, U.S. 30-year, and you can see the bid is where's it at? The bid is 153. See where my little box is right there. 153 in 12/30 seconds, offered at 13/30 seconds, and it can get as tight as something like 6/64 or something like that. Again, they can make it really tight. Or I guess it would be 26/64 in this case here, 26/64. So they can keep a market really tight with the fractions. I mean, my son, we were measuring and building something over the weekend, and they were saying, "Why do you use those fractions? Why do you have to say, let's skip eighths, just have halves?" So we'll go 26.5, not 26.25 or 26.125. It's like, no, you can't cut things that way. So my son has a habit of measuring once and cutting 3 times. And so he'll cut, like, if it's, let's say he measures something that's like 26.25, then what he'll do is he'll cut it at 26.5 and then cut it a few times. Because you can't undercut, you got to overcut or you'll be in real trouble. All right. Anyway, fractions are the world of the Wild West. All right, back to, where did we go? We were looking at euro, so now let's take a look at cable on both. Where's that at? There's the cable again, yeah. So it's trapped in its bottom end of the range. Take a look at it over on J4X. Right there. Seems to have shown the top end of its sequence, matching up with our, where is it? You're not seeing it. There it is. Seeing it there where it plays with the top end of the range. Doing the same thing right there. And trying to roll over, we're rolling over here, and obviously the price tries to roll over. That's what it's all about to begin with. It's predicting future movement of an object moving on a surface. Wow, that sounded right. I like that. All right. From there, we'll take a look at Turkish lira. See what the Turkish lira is up to. We'll take a look at the dollar Turkish lira first, right there. And let's take a look at it right here. There we are. And you can see it's just, contained in the box. The big, long rectangle that's going to keep on growing and growing and growing and growing. And you're going to see our math in some aspects of it tighten and tighten and tighten. You're going to see this time manifold shrink more down. And you can see it already on a daily, getting to a point where it's really tight. Looks like the free put is the answer to it all. I probably beat this drum constantly now, where the free put has really established something really positive for Turkey. Now Turkey, after all this whole decade being behind the curve, is now ahead of the curve. So see that? It happens. You know, you do enough wrong things, and after a while, you finally get fed up, and you go, okay, let's try something new that works, not something that will just throw a patch on a bad wound. As we sip our tea on the 5-minute cycle, and so Turkey is giving out free puts and keeping money invested in their country. And so if they have to raise taxes a little bit, I'm sure they will, but it's a lot cheaper than exhausting all their sovereign fund and exhausting all their bank reserves and, you know, all those complicated things that really hurt an economy more. Now it's kind of like a way to fill it back up again. All right, from there we take a look at what we call the location, and that is the Turkish lira against the euro, or euro against Turkish lira. Take your choice. Right there, euro, Turkish lira. Same thing, we'll start to move that box over again. That. You see it's trapped inside there, having no problems whatsoever. Oh, look at that, the weekly's lifting up here. This is interesting. And it's in a daily buy from there. So let's see what brings this week, huh? That'll be interesting to see. Where was the dollar Turkish lira weekly? Let me just go back to that. Oh, it was doing the same thing. Lifting up. Interesting. I'm not really convinced that there's any real panicky problems there, so it's just going to be firm. You know, in other words, the math is going to have to start to adjust for all the wild volatility that we saw in this product for the last 8, 9, 10 years. Remember, the currency went from 1 euro to 18, no, I'm sorry, this is in dollar terms. One Turkish lira against the dollar to 18 Turkish lira. It's an enormous, super, uber, over hyperinflation. And then we saw in the same time period, we saw the euro Turkish lira go from 1 and change to almost 21. Whew. Wow. You know, talk about hyperinflation. They wiped out their sovereign fund. They wiped out all equity that they had in their, their Federal Reserve. And then at the same time, they did some type of borrowing trick that really put a punch into the poor currency at one point, where they thought that they had these reserves all parked to the side, claiming they had like 3 or 4 billion. And in fact, they had none. They'd been borrowing the money and pretending that it was equity, when in fact it was liability. So for you accounting types, you'll understand that more. But the end result is that borrowing money and claiming that you have money in the bank are two different things. And the accountants definitely look at it that way. One is a liability, and the other one is an equity. And so they were parading around their data, claiming that they had more money parked in their pocket, when in fact all they had done is had a loan and borrowed money from somewhere else. All right, from there we'll go over to the Canadian. We're starting to think that most of that noise in the Canadian is the truckers' picket. The truckers are picketing all the crazy policies that are hurting them, or the policies that are hurting them, and they consider them to be crazy. How's that? That sounds fair. And a lot of us think they're crazy, but not the Canadian government, or not GoFunded or something like that. Not the socialists. They don't see it as crazy at all. They see it as like normal. So that's where they're trapped on that. And so maybe that's the reason why we're seeing this strength here. Is normally we don't see this type of strength bouncing up like it did off the 50 percentile. And that was when the truckers' rebellion started. And we saw at the same time, let's see, we can put that up over on J4X. And at the same time, you can see the oil market, the light sweet crude right there, on a rampage on the upside. How can I do that? Right there. See that rampage? So we're willing to look at this and say to ourselves, maybe it has nothing to do with oil or gold. It has more with the trucker boycott that's been going on. And I understand that they were going to steal the money from the truckers of the Go Fund It. But one of our senators jumped in and said, we'll charge you with stealing and racketeering if you dare to do that. So they had to give them back the $10 million. So that's good. So the truckers have some money to, and then, I heard the government today tried to take truckers' fuel away from them, so they couldn't have fuel for their trucks, so they can't boycott the government. Remember, if you're boycotting something and you can't show up because you don't have enough fuel to get there, it's awful tough to push a big giant rig, maybe 100 miles, 200 miles, or 500 miles, or 1,000 miles, or in this case, 1,000 kilometers, or 500 kilometers, or 200 kilometers. Tons of weight. You can't get behind it and just push it. You can't go grab a donkey or a horse and connect it to the front of it and try to pull it when it weighs thousands and thousands of tons. Well, maybe 50 tons, something like that. That's still a lot. It's 100,000 pounds metric weight. Take that and what, 2 point something. So, yeah. All right. So now when we look at the Canadian, we assume with this odd sloppy action and this strength right here in that daily, let's put that buy in there. Went into the buy on Friday. It's flattished it down a little bit today. And you can see we're in a weekly buy, but trying to curve. And so we would assume that, and you can see it's been moving up, like I said, right here, this action there. But oil is not going down. Oil is now trading at one of its highest points, which will show you. You see it on J4X. Let's show it to you on Chicago Quant. See right there. There's the spot oil. You can see we are just down a little bit for the day now. We were plus. We're trading $91.51 there. So we've made more higher highs. What are we like? 2-year high, 3-year high, I guess something like that. And you can see we've been in a weekly buy for 2, 4, 6, going on a 7th week. It keeps on marching up. And as you can see, same thing as J4X, going up, going from the high 60s to now to the 90s, as you see there, 91.49. Let's see what they're doing. What caught my eye on Friday was, I think Brent North Sea oil was like almost the same price, which was really surprising. Sometimes it's usually $2 or $3 premium, sometimes even more. But look at Brent; it's only $1 higher, $1.25, $1.50 higher, which is kind of surprising. So the premium is starting to shrink. Sometimes that could be indications of getting exhausted, and the market's kind of doing its topping out thing. So that has been, kind of an interesting adventure we're seeing there. And so that is the action we see. Let's see now. So from there, you can see Brent banging it around the top. This is pretty much why, in many ways, we think the military flexing, or between the I want to say our leadership here in the States is not very coherent, and when it comes to foreign policy. So they're running around screaming that invasion is evident. It's any moment. That's what they're saying. It's going to happen any minute now. They've been saying that for like 3 weeks. Invasion from Russia into Ukraine. Remember, it was supposed to be 2 or 3 days, like 4 weeks ago. 2 or 3 days, they're going to be invading. Well, they're not. And I'm sure 4 weeks from now, we'll find ourselves sitting there going, our administration will be telling us that they're going to invade any minute now, but they're not. And I don't see any invasion coming. I see the invasion that's already there. I see the issues that already have happened. But I think that what it really comes down to is Mr. Putin is just trying to get his equity up in the government. In other words, make money off of the increasing value of oil. I mean, they are the top 3 producers of oil in the world. So yeah, they're tied with the United States and Saudi Arabia at any given week or month. At this point, I think the U.S. is number 3 out of the bunch. After under Mr. Trump, they were number 1, but out of the 3, and so between Saudi Arabia being number 1 sometimes, and then sometimes the Russian Federation, and then sometimes the United States. I think that's all this is really, just continuous posturing. You got to have those troops somewhere. I mean, they don't have to defend the Siberia, or they don't have to defend other places. So you got to park them somewhere. So park them there, and get your oil prices up. I mean, it's not like he's not going to have to pay them one way or the other. It's not like he's. It doesn't seem like he's ordering reservists to put uniforms on. It's the other way around. It just seems like he's moving parts on the chess table. Or Mr. Putin plays chess. Our president likes to play something called X's and O's, or checkers. It's a little bit less complicated game. All right, from there, let's take a look at, on J4X, let's take a look at natural gas. See what they're doing with natural gas. Oh, no, wait a minute, that's right. We're going to go to the ruble, and we're going to go to the South African rand, and then we'll come back to the rest of the commodities. So let's see where the South African rand is. Since oil is kind of moving up, and I believe last I saw gold was moving up, we have to assume, before I push the button, that the South African rand is moving down. Let's see. Not what I was expecting. Let's take a look at it over here. I am expecting a move down. Let's see what it looks like in, yeah, it's just flattish, just a twinge up. There it is. And you can see we were in a daily buy from Friday there. And you can see it took out Friday's high today and is now moving back down to almost the 0 point. Almost unchanged from Friday. You can see our weekly's been in a sell for weeks, since this 16 area, and we've drifted down almost to the 15 area, and now we are at the 15.5-ish area. So, again, I think it's more of that noise. We'll see if this lasts for another day and it starts to get pulled down, or the weekly gets to go through. And you can see over here on J4X, same situation. It is pushing up like that, like it is right here on Chicago Quant. They're moving in the same manner. 2 green Hinky Ashis and a white line beyond the dashed line. All right, from there, we jump over to the ruble. And the ruble making it another nice new little teeny weeny little low, but that's better than a high, that's for sure. And you can see we slipped into the weekly sell last week. Did we slip in a weekly? No. No, we need the, we need this, oh, okay, yes. So we pushed into the sell there. Let's put that in there. You just double check it on the fact check spreadsheet, which we still haven't done about moving it over to this machine. I am a little busy bee, that's for sure. Let's open that up. Where are you? There it is. And fact check spreadsheet shows, a lot of traders here get that at night. We send it to everybody free who asks for it. Come on, you can do it. There we go. It's opening up now. I think it's opening up now. Oh, there it is. Okay. And ruble is in, yeah, weekly sell for 1 week. And a daily sell for 7 days. So it's been a daily sell from there. Joined in. Now today, you can see it's trying to lift its little head up. And it's already back over the 0 line. Right there. See how well that holds up. I think if we keep on this daily course, more than likely we'll see this roll over. From there, we go over and, oh, we didn't put it up on J4X. Let's put it up on J4X and see how it looks. There's your ruble. Now, all that red still hasn't lifted up on the daily at all. whereas here it's, well, no, it's in a daily sell also. They're both joined in very well. Let's get rid of that. You see that both joined in very well with that nice red action you're seeing right there. And you can see our weekly is doing a little turn. That's all. Nothing major there. Go to the Japanese yen, dollar yen. See, it's perked up. It went into a daily buy on Friday. We had a volatility signal on Thursday. Put that in there like that. There you are. And you can see, oh, nice. It's flirting with its weekly sell. Okay. So we went into the buy down in here. We went down there again after making a new high, and then we went down there again after failing to make a new high. And now we've jumped into a daily buy, but we're heading into that weekly sell. So I guess this is going to be the top end of the range. Now we've been looking at the dollar yen, and it's at a 5-year high, which is caught our, we're paying attention to that. When you see a 5-year high in anything, you're thinking, what's that got? What's that all about? And so that's where we are at the moment. We'll see if this starts to lift and we get, some type of another action like that. And when it does, then more than likely it'll pull that weekly back up again. And if not, then it'll roll over, and that's why it's going down. Let's put it up on the J4X. Right there. Doing the same thing. We got a couple of greens there. And strength. The line is through, like here. So that is what we're seeing there. Now, since it's over past the halfway point, let's have another sip of my tea. Nothing exotic, just a black tea. All right. Let's see, what else can we look at here? Alrighty. Now the next thing is the last of the currencies we look at, unless anybody out there wants to see them, and that is the Mexican peso. See what they look like this morning. Right there. A little greenish, finding a bottom. And let's see what Chicago Quan has to say about that. But more than likely it's matching up to J4X and vice versa. Let's see, where are we at? Right, Mexican peso. Right there. The only difference normally is that it takes a little bit longer for J4X to catch up, that's all. But it's the best public indicator out there. Nothing can match my math. At least if you can find anybody out there, if you can find something that matches my math better, go for it. And this would be the template. Go find, use our calculations we use in J4X, what we call Manhattan, and then you find something that can beat Manhattan, and then we'll match it up against my math. We'll have a battle. Technical analysis battles. See who is truer. All right, there's so there's Mexican peso. Still a little firm, but look at it, it's starting to flirt with the daily sell. You can see here it's still jumped up, so we'll see how long that lasts. And we are, what did I just grab? I grabbed something. I have no idea what I just grabbed. What did I just grab? Oh, I guess it was that. I see how it. And so it's like, oh, I see it is. We have an RSI below. Someone asked us for an RSI below, and so we put it in there. Doing that challenge thing of our math, And let's jump over to see, what else can we say about the peso? I guess that's about it. Just keeps on flirting with staying in the buy. And we had some green dots. You can see here on J4X, it's trying to perk up. We'll see. See if there's some noise going to kick out on that we end up seeing the peso moving back up through this channel that had been a pretty decently established channel. This explosion, this big black area we parked there was the meeting between Mexico, United States, and Canada. Mr. Biden put a meeting together with the two leaders, and that just drove the thing crazy for a while. And then it seems to have played back to the range. So we'll see if it starts to stay in that range. Then it kind of insinuates a large head and shoulders, really, doesn't it? So it's a head and shoulders top developing. All right. From there, we go back to the commodities. So we'll do that. Go right to here. And while we're doing that, remember, traders, if you want to say something or ask for look at something, go do it. Don't be scared. It's okay. I know it's Monday, so most people don't have a desire to communicate to begin with. But we're here to explore new ideas. Boldly go where no trader has gone before. And that's usually our object. All right. Remember, if you're the first trader to get to something that's new, sometimes it can be extremely profitable. All right. From there, you see we're looking at crude oil at the moment. There was that pressure. We saw Brent, same way. They were all way up at their high ends of the ranges of like a 3-year high, I think. We can go take a look on J4X real quick. Let's do that and see when's the last time we saw these products in that range. Let's take a look at Brent. We'll make Brent a monthly, so we can see it instantly. Maybe we'll make it the whole page at the same time, like that. All right, the last time we saw Brent up this high was in 2018. And the last time it was this high was 2014, at the end of the year. So 2014 and 2022. So that's 7.5, 8 years almost, 7 years plus. We're taking out 7-year highs. That's what we're doing. Something about that, huh? And you can see that back in 2012, we were up in the 120s. Interesting. Let's see what West Texas looks like. And the same characteristic right there. Same situation. There's 2014. And we are going after some of those prices of 2014. We've taken out the highs of early 18. And so we are seeing some of the highest numbers. So we've seen this product on a given month, in the month of May of 2020, this product went a minus $39 on spot. In other words, you could have oil for free. You just had to be able to take delivery of it. They threw it out the door. It didn't just go to zero. It went down to a minus $39. People paid $39 to give you oil. It's like an ECB thing, That's funny. And now we see this product trading at 91 and change. So that's a fascinating thing there. Now let's go back to the dailies. So we're looking at 7+ year highs. Wow and yowzer, huh? It's like back to the Obama years. Back to the future. All right. Let's see. From light crude, we go over to nat gas. Let's see what nat gas is looking like. And there's natural gas out of the States. Right there, isn't it? Gas. Is it $1? Where's gas at? Right there. There we are. We're trading about $4.40 a unit. And you see that right here. A unit of gas. Let's see, where is it at? I have a problem right there. There's the March contract. You see it? 4.416, and you see the same thing right there. It's just transacted 41419. It's offered at 21 now, 16 bid, 17 bid on Dukascopy. 16s trade here in the States. 7s are bid for, 11s are offered. You see some wild and woolly action. 10s are offered and on Dukascopy. Now the United States has caught up to it. It's now offered at 10 there. Now it's 12. Good action. Good trading. From there, we take a look at the European gas market. Oh, look, what can we say about this while we're looking at this too? At the same time, you can see the daily is trying to roll over like it has done 3 days ago on Thursday, the close of Thursday for our work there. And it's 3 days down now. You can see we've been in a weekly buy for a few weeks. Right at the top, went into a sell on that. There was the top that day, and boom, it fell down. Now let's take a look at natural gas on J4X in Europe itself. Traded in euros. Right there. It's trading it's moving down also. It was trading in the 28.5, the 29 range in the unit, per unit in Europe. Now it's down to 27.67, but the numbers are scary. Whereas in the States we are 4.4 a unit right there, as you can see. In Europe it's trading at 27 a unit. Ouch. Wow, what's that, 8 times? It's almost 8 times difference. Wow, big scare. I guess, they're trying to figure a way of, getting the market under control. This has got something to do with Ukraine, I guess, again, the whole bit. It's, in the end result is the Russian Federation is making money. Making money, money, money. That's what they're objecting. Hey, there you go, 847. I just looked over to the right and saw that. Can you look at Gbp Jpy? Did you hear what I said a little earlier? When I said no one had asked for anything, I said, we can boldly go where no trader has gone before. It's like a Star Trek thing, huh? Boldly go where no trader has gone before. And that is, let's take a look at Gbp Jpy. Who needs to look at oil? Unless someone wants to see oil. Okay, you can see here we were in a daily buy. You can see today it is flirting with the sell finally. You tuned in right. Look at that. The weekly has broken underneath this week too at the same time. So we're seeing the pressure of all of it. A little pressure there, so maybe it'll go challenge this stuff. You can see it's trying to get into the sell. You even got a red dot. Let's check it out on J4X. Gbp Jpy right there. See that? We got a red hinky doing the same thing, matching up to our red dot. You can see the line has crossed, same as here on Chicago Quant. See that? Nice. This indicator is doing a fine job. Our Manhattan indicator. Combining, the only thing we need to clean up next is put a regular bar chart above it. Find a way to move the hinky axes down so it can emulate the dots, keep it emulated like the dots. And at the same time, see the fast and slow stochastic matching up. Beautiful. Beautiful, beautiful, beautiful. And so we'll see how the weekly goes. It looks like there's some pressure there. And you can see here, there was a nice run from the 150 area. Yeah. It was like the 150 area. And it went into the daily buy right there. Then closed in the weekly buy right there, and then you had your lovely run. It was many, many winners, chicken dinners, many of them. Then we went into a little sell for a couple of days, a little pop again, another chicken dinner to have, and then it went into the sell, and that was a savor of profits, all the buku money you made. We like to use our Vietnamese once in a while around here. A little buku money, and and then you can see strength again, another winner, a few chicken dinners again. And so there's the action for Gbp Jpy. All right, DocDow. What else we have to say about that? Not much really. It's a nice product. I think that's really cool that 47 follows it. We like to watch it. You can see some of the distances between the daily sell and a daily buy. Same thing, weekly sell and weekly buy. It does read things well. It goes into a daily sell there and catches the nice smooth slide. Many, many chicken dinner wins. And you see it goes into the weekly, the daily buy here, and you just get one little, they take a wing or they take a leg from you. But what's the difference? It's chicken. And you can see we're through the manifold, but end result is that then it gives you not only you might have even lost half a chicken. Here it gives you like 8 chickens. Lots of chicken. So many, many winners. No problem, 47. Go find us another one of these. We like seeing currency pairs that have so nice, consistent patterns year over year. This has been a great one that you've discovered. That's why I'm saying, traders, go find something that looks fascinating. Let's work on it together. Let's go boldly go where no trader has gone before. Find us another pair that's kind of neat. With that, I think Doc earned himself a sip of a tea. What do you think, 47? Can I have my sip of tea? There we go. That was good. Now, where were we? We were looking at natural gas. That's right. We were looking at natural gas. So we've done the natural gas. We've done crude oil. What else we got to do with the energies? I guess from there we'll go over to the metals. See what the metals are doing. I think I showed you gold. Didn't I show you gold? We were going to, compare it to the action in the South African rand, and I probably drifted off to something else. But let's go check out that, and that is right there. And let's show you Mr. and Mrs. Gold, right there. Yes, gold trading at like a 6 or 7 day high. Hooray for it! You see here it closed in a daily buy on Thursday, so Thursday and Friday. It almost made it on the day before on Wednesday, but just by the hair of its chinny chin, a mere 22 cents, it stayed in the sell. But it was giving us loud noises saying, don't be afraid. Now you can see our weekly is turning back up again too, which is cool. Let's remove that like that. And you can see it's getting through the zero line. Who says there's no inflation, huh? And then let's check out Mr. and Mrs. Silver. There it is right there. Let's go over to J4X and see how it looks real quick on the same products. And there it is on the gold. Same thing, lifting up. Up, up, and away in my beautiful, beautiful long gold. And then let's take a look at it on the silver right there. Silver's trying to lift. Got a little green hinky going on right there. After that nice big slide from the 26 down to the 20. No, I'm sorry, the 24.5 down to the 22. And you can see here, silver is doing the same thing. Actually, we can move that over now. It was a red and green. Now it's just a green. And you can see here it's lifting through. And you can see the weekly is lifting through. So if Robin's out there, how about that, Robin? It's trying to get its little mind up, isn't it? It's trying to get that silver moving again. We keep on saying, hello, inflation, hello. Look at that. We are not even taking out like 3-month highs. We tried once, a couple weeks ago. They tried to go after a 3-month high, but it was a lower high in the end. We haven't seen, look at every one of these have been lower highs since it ran up into the 28s. It's been lower highs all the way through. Let's see if one of these can break a high. Remember the last time we did that with all those reverse head and shoulders? We went 5 reverse head and shoulders before it finally took off. It's missed like how many? Is it 4 now? Let's see. So this is the 4th lower high. 1, 2, 3, 4, 5. Yeah, 5. So it's the 4 to 5, depending on how you count it. So maybe we're coming to the end of a little teeny-weeny little sloppiness of the last bunch of months. Was that 6 months? Something like that. That high was back in May. So springtime, it's almost a year, isn't it? Let's see, so what do we have? We are in February. So February and March, April, and May. So 8 months. We have not been able to take out a new high in 8 months. Who says there's inflation? Huh? besides all the price tags of everything you buy. If it wasn't for the price tags and the cost of things going up, there would be no inflation. I make joke. All right, from there we go over to copper. I saw copper down this morning. I was a little confused by that because I saw gold and silver up, and I was like, wait a minute, something doesn't seem right there. But there it is. There's copper. And let's put it up on the old machine here. Right there. You see copper down. What's up with that? Flirting with the daily sell. In the weekly buy now since here, but what a tight range it's been. You know, very tight. It kind of did the same thing. High in May, and then was a lower high there. And how you define that is usually because you've taken out a lower low. You know, so in other words, like this low was taken out, or this low was taken out, and then this low taken out, and then this high fails to take out the previous high. That's how you do it. And then you have a new lower low here, taking out that low, and then you have a higher low there, and then it does the same thing again, and then it does take out this high. So it's like, ooh, okay, maybe we're getting to go. I think we were fooled on that one too. It was a trick. But it was a lower high than this one over here. So then we're waiting for is a new lower low, and we're not seeing that. So now it's triangling on us. So you know, you like draw a line from here to there, and you draw a line from here, this low here, to there, because that's the lower low. And you can draw the line there or there. Either way, it's the line. And notice that that low is now supporting that line, and it's becoming a big, giant triangle. And so that's what we're seeing the industrial metals do, is it's triangling, and it's not really showing us, like, whereas they've been running after the precious metals. It seems like what a wonderful run. I mean, this is the 480 area. I think when you look at copper, that could be almost all-time highs. I think it got up to the $5. Let's do that. Let's go over to J4X, put in a monthly, and see if we are looking at anything more than just, I think it's only like the second highest high type of thing. Let's see what J4X shows. I want to get the full screen. Now that's going back to 2014. So yeah, it didn't take out the 2000 high, but we are flirting with that. See, this is a little bit lower than that. These are hinky, so it is possible that one of these might have taken one the other out. Either way, we are not taking out any highs, that's for sure. You can see it's trying to do its little bottoming thing, so that's a very positive thing overall on a month-to-month basis. See how at the beginning of this month it was down at the low ends of the range and found a way to climb, and we had all those hinkies for over a year in the green. All right. Interesting on the industrial metal there. Let's go take a look at platinum. Let's see what platinum's doing since we are looking, and it's Monday, and see if, I mean, it's in a weekly buy, and it has been kind of the strong suit when it comes to metals is the platinum. It is trading about half the price of gold, which is insane in its own right. In other words, for us old traders, it's like, are you kidding me? Platinum is not trading at a premium. Yeah, they're trying to press down on it again. I think we've been in a daily sell since right here. Nothing major. Really hasn't gone anywhere. You know, it goes up a little bit, goes down, trapped in the range. Now we're making a 5-day low, which is nothing uber crazy. And you can see here the weekly has been in its weekly buy since the end of December, and seems to be holding up, just flirting with the time manifold. So I don't know if we're going to be seeing anything too exciting out of all this metals noise, but it is curious to see the copper act as weak as it is. But still in that weekly buy, traders. So we shall see. We shall see. We shall see. All right. From there, where do we go from there? Usually, I think we take a quick look at the stock indices. So let's do that. We're going to jump over to the stock indices and see what's up with them. Last I looked, they were moving up. It's been a good day for them. I get, you know, it was minus. Now they're about up as much as they were down. No, I think it's even more now. So You can see there the S&P 500 up 12 points. That's the highs of the high. There is the, let's see, let me show you the European Open. It was down in here. No, wait a minute. European Open. Okay, so they climbed back to the European Open. That's what they did right there. And there's the European Open. And now we've made new highs from the European Open. Okay, interesting. And you can see the weakness is slowly leaking in here. The last, remember, this is like a 1.5 Tesla. I think it's 1.68 Tesla. That's what this is. So that's the increment of bars we're using. So it's 639 tick. And a Tesla is 369. 369? 396, I'm sorry, 396. So 396, and here I think we have a 1.68 Tesla going on there. You see the manifold tightening up. This is, like I said, this is intraday trading, so it's hot and heavy. When it goes through this area here, you get long. When it goes down below it, you get rid of it or you go short, and then vice versa. It jumps back into the buy right there, and it goes up in value. You see it drops underneath, and it goes down or sideways in value. There's, these are a little bit more trending there. You see it gets into a sell right here. Is it right there? Right there, yes. Right there is the sell, and it just goes down, down, down. And then it goes into a buy, and it goes up, up, up. It goes into a sell, and it goes down, down, down. Right there, you see, and it goes into a buy right there. It goes up, up, up. And then it'll sell, down, down, down. And it goes into a buy. And the reason why you pay attention to my webinars is because when it says to go long, it does go long. It goes up in value. And when it says to go down, it goes down in value. So that's the whole trick of that, name of the game. All right, let's take a look at the other two indices real quick. There is the Nasdaq 100 up 56, or what they call on Dukascopy, the Tech 100. Let's just show it to you right there. And there is the Tech 100. We just showed you the one above it, the S&P 500 that Dukascopy has. You can see a little pressure on it right there. This is very interest sensitive. That is part of the process right there. Is these stocks, it's like the Amazons and Googles and Tesla and Netflix and all the high techs that are very cash hungry all the time. So interest rates mean a lot to them. They're very influenced from it. Last but not least, we'll take a look at the Dow Jones Industrial Average. Same thing. You can see it's up 50 points. It was down like 60, 70 points when I first got into the office here this morning, which is now 3 hours ago. And you can see here, all the internals are very firm. And tomorrow we'll take a look at the dailies if anybody cares. Or anybody cares right now, we'll show you a daily. If not, Doc's going to sing his way out of this. So, happy trails to you until we meet again. Happy trails to you, to all our trading friends. Ta-ta, traders. Catch you tomorrow, same time, same channel.